Hey everybody, hope you're doing great today. In this video I want to talk about the steps for getting ready to purchase a home. Basically the financial aspect in terms of what you need to do prior to even applying for a mortgage pre-approval. So that way when you are ready to buy, everything is lined up, and when you apply for that mortgage pre-approval, you'll get the best possible results. So first thing first, you don't want to start looking for homes right away. You need to first understand what your budget is, what your current affordability is, and how does a home fit in with that. So there are a lot of online calculators that you can use to figure out, say, okay, this is a home I want to buy, this is the price range I want to purchase in, so let's punch in some numbers to figure out what will the monthly cost be. So basically when you're buying a home, unless you're paying cash, you're going to have a monthly fixed cost that you're going to be paying towards the mortgage. If you're also paying into escrow, you'll also be making payments for insurance and taxes. So the insurance and taxes will be divided over 12 months. So basically whatever you're going to be paying for the entire year in terms of insurance and in terms of taxes, the lender is going to look at that, total it up, divide it by 12, and that will be the additional payment that you'll be paying. You'll be paying that on top of whatever your principal and interest payments will be based on your mortgage. So mortgage rates are currently higher than they have been in the recent past. So that changes the range that home buyers should be looking at for home pricing. So whereas in the past you can get a 2, 3, 4% mortgage interest rate, now you're looking at 6, 7% depending on the type of program you're getting, the type of loan term you're getting, and what the current mortgage rate is for the day. Rates do fluctuate, especially now they're fluctuating more frequently. They've been on an upward trend. So what you could afford at 2, 3% now may not fit within your budget at a 7, 8% mortgage rate. So prior to even having your credit run with a mortgage lender, a few things you should be doing first. One of the main things is to get your finances in order. If your finances are perfect, you don't have a whole lot of debt, you've got good income, then that's one step you can cross off. So in terms of getting your finances in order, that means taking a look at all your debts, especially short-term debts, credit card debts. Those are looked on negatively in terms of your credit report. If you can pay off those credit card bills, pay off those store credit accounts, reduce those outstanding loan balances as well as things on cars, furniture, whatever you have long-term loans on, get rid of those. That's going to put you in a better situation to not only improve your credit score, but also improve your chances of getting a good mortgage, qualifying for a good program with a lower down payment and a lower interest rate, which is going to save you money over the long term. So talking with a lender right away is not necessarily a bad thing. Talk to a lender who's able to provide other tips and advice rather than just going right off the bat and say, hey, I want to pull your credit, we'll run a pre-approval. If you have other things you need to take care of, like you've got some credit issues, you want to improve your credit score, ask the lender or ask your real estate agent, do you know of any credit counselors? Some lenders do offer credit counseling services. If you work with them, they'll put your information into a computer program. That computer program will look at everything and say, okay, pay off this first, pay these down to this amount, and you could boost your credit score by X%. So that's always valuable. That's always helpful to maximize getting the best possible loan and paying the lowest amount of interest, which saves you over time. As of today, with mortgage rates on the way up, the whole thing of buying now, getting whatever rate you have now, and then hoping that the rates come down in the future might happen, might not happen. At this point, we don't know the situation. We don't know where the economy is going. Inflation is still sticky, so the interest rates are staying a little higher. So it's best just to get the best deal you can get now, and if rates do come down in the future, that's great. Hey, you can refinance, reduce that rate, and reduce your overall payments as well too. So with your mortgage, basically it needs to fit in with your monthly budget. Don't look at what your future potential monthly budget is going to be. Let's say you're hoping on a raise, you're hoping on a promotion. Don't worry about that. We don't know if that's going to happen. Just look at what your current budget is today, look at what your current income is today, and where does that mortgage fit in with your range. From there, you can back into what house price you should be looking at based on how much monthly mortgage payment you can afford. One other thing in terms of getting your finances in order, depending on the time of year, if it's earlier in the new year or you're getting close to the tax season, prior to the deadline, get your taxes filed. That way, if you have your most recent tax information, your lender is going to ask for that when you apply for a mortgage as part of the process. If you have the most recent years, it makes it much easier. Now, obviously, if you're late in the year, as long as you've had your current year's taxes filed, the lender is going to be happy with that. But then as you move forward, if, let's say, for instance, you haven't purchased a home and a couple months passes, it comes tax time, make sure you get your taxes filed on time. That way the lender has that document ready to go, and that's one less step for you and one less headache to worry about in case somebody says, hey, we haven't seen your taxes yet, we're not going to approve the loan until we see that. That's going to save you some time. So in terms of understanding the mortgage affordability, you also need to look at how much money do you have to bring down when buying that home. In the past, the typical number was 20%. That's not necessarily common these days. You can go down as low as 0%, depending if the home qualifies for a USDA, or you can qualify for a VA loan. There's potential for 0% mortgage. Talk to your lender, find out what options are available to you. 20%, while great, is not always the requirement these days. You can get by as little as 3.5% depending on the mortgage program. I've seen some 5%, 10%. Talk to your lender. Until you talk to the lender, you're not going to know. By increasing that down payment, you are decreasing your monthly payment, so that's helpful if you have that money saved up, or if you don't have that money saved up and you know you want to buy a house in 6 months, and that gives you some goals to start saving money. Now, if you have some high interest debt, my suggestion would be to pay that high interest debt down first and then work on saving that money, because even with the current higher interest rates, you're actually making more money. You're getting better return on your investment by paying off that high credit card interest rate versus putting into a savings account where you're still only getting 4 or 5%. During this process too of getting ready to apply for a mortgage pre-approval, you also don't want to take out any new loans unless it's an emergency situation where you need that money for whatever reason. No new cars, no new loans for furniture, no new loans for electronics. Keep your credit steady and stable where it is right now. That way, any new loans, any new mortgages, anytime your credit is pulled again, that pulls your score down. And that hurts your chances of getting a better mortgage where you've got lower interest rates, better down payment requirements than you would otherwise. Planning now, planning for a future home purchase is a much better idea versus deciding tomorrow, hey, I want to buy a house. Let's go sit down with a lender. Getting everything in order, getting your financial house in order, and then sitting down with a lender, sitting down with a real estate agent is going to ensure a much more positive experience. That's all I have for this video. I hope you found it informative. If you did, if you could hit that like button, I would appreciate it. That also helps others find the video. Thank you for watching, and I'll see you in the next video.